All right, everybody, how are you? Orlando here, and I don't know why my camera isn't working, but yeah, I am here. So I only trade two pairs. I only trade gold, and I only trade the U.S. dollar, Japanese yen. So that is what we are going to look at. I'm going to start with the U.S. dollar, Japanese yen. As you can see, I already have plotted some levels here. This is the daily chart on the U.S. dollar, Japanese yen, right? So these are the levels that are most important to me at the moment. This low right here is a December low, and as you can see, our price broke with that December low, and now I am waiting for direction. Remember, I'm a day trader, right? But overall direction in the market is very important to me because what I do is I fade the short term. I fade the short term trend in favor of the long term trend, is which means that basically what I'm doing is just buying dips and selling rallies. But that's important to know the overall direction of the market. So basically, we have swept with those December lows, right? You can see that here is the swing high on the daily chart, and here's the swing low on the daily chart. So this particular last candle, I'm sorry, Friday's candle, this one right here, yes, looking like a very bullish close, right? But it doesn't mean anything to me, to be completely honest. And the last line that I have here, this is last month's highs or February highs, right? So these are the levels that are most important to me. Let's go to the 4-hour chart, right? To look at this particular swing low, right? This is the market structure that I'm looking for, and as you can see, as you already know, this is the low that's very interesting to me at the moment. Yeah, what I do is I trade price failures, and what I'm looking for is possibly a price failure higher, right, or a price failure from this particular December low, right? There were a ton of stop orders here that got filled on the last 2 days of this week. So that is a good starting process to for liquidations, right? Now, this is extremely bearish. I am not particularly looking for longs at this levels, right? The most important, the higher probability trade as this daily candle close. This is the entire, Friday candle. Is bearish on a break of these lows. I know the further downside, there's a ton of room, a ton of space for further downside. We're looking at possibly from the lows here to these lows at a 100 pip move on a possible break. And as you can see, this market has been breaking with the structure over and over again. So, yes, the short side in this market is what we should be looking for. But I wouldn't be myself if I weren't talking about price failures, right? Or about possible reversals from very important key levels, such as session high lows or weekly and monthly high lows. So basically, there's two options here, and that will be determined on Monday. The first one is if we in fact continue with this structure low and create a lower high that will liquidate this low, creating a new lower low, continuing with what we already know is true. But if a buyer starts to step in right here and we break with this particular high, I would consider this a very important shift in the structure in this market. Why? Because if you notice, on on all of this move, we have never ever shifted with the true structure of the market. And if you, I mean, I know some of, you know what, I'm not even going to do that. But there's different ways to see the market. Whenever I'm struggling with, with swing highs and swing lows in the market, I go to the line chart, and it's very clear which are the true swing highs and swing lows. Now that's just a little plus right here. So basically, On the US dollar Japanese yen, remember, I am not going to, I'm not going to trade a break of these lows. But I will consider a break of these lows for a very, couple of bearish days, Monday and Friday and Tuesday. But if we move higher, this will be in fact a very, very similar to my entry model on a daily basis on which I trade the same kind of thing, but from session high lows. So if we shift on the structure, the next target should be and will be, I think, February highs on the higher time frames. But if we break lower, I could see price drop immediately to these lows, and more importantly, to try to liquidate somewhere around these levels. So if let's have a look and let's zoom in like this, right? So to finish up with the Japanese yen, we break with the lows. I could see the 149.91 level achieved. For further downside, I could go to the 143.50 to 143 to 143. So a ton of room to go down. But if we shift with the structure on this 4-hour high, that would be an extremely bullish move. That could give us the room to go upwards to the 155. 50. So both scenarios are okay with me. I will trade whatever scenario the market's willing to give me. I'm not picky that way. So I'm sorry, gold, the only other market that I trade, it's very bullish. It's very bullish. And I want to talk about this because it's quite interesting. Again, in this kind of situation, I would most definitely go to the line chart, right? Because on the candlestick chart, I don't like to use colors on my candlesticks. This is planned to have only lines and colors. That's how I trade. But in this particular, very strong bullish move, it's very hard on the daily to understand where the high lows are. So if we go to a line chart, you can see that we had somewhat a break of the structure with the price, breaking and not only breaking but trading below this low right here. Remember, our line charts do not fill wicks, so that's the week low of the move. So we had, and for how long, guys? From mid-December, on which price printed these lows, we haven't had any break of the structure. So coming back towards the candle chart, so this break of the structure is quite important to me. Now, this doesn't mean that I'm short. I absolutely not. I'm sorry that I'm bearish. Absolutely not. I am not one of trading in front of such a heavy train or trying to catch a falling rock. My only job is to try to capitalize from chunks of the moves. But direction is super important when you're doing that. So basically, what I'm going to wait for this week is a possible liquidation of these highs, which are all-time highs, right? For possible shorts or price failures above these all-time highs. There should be a ton of orders here. I don't have the book map with me to see how thick this zone is, and I don't think that I would be able to see it on a weekend. Now, if we go to the 4-hour chart again, on the forward chart, it's quite interesting that we have these two very, very, very important zones. This highs right here, of course, the lows. This is the box. I like to call this price trapped in a box because if you see all these weak highs, well, now, I mean, what this tells me is that there's a ton of selling pressure here, right? Ton of selling pressure just by looking at candlestick behavior, right? There's a ton of selling pressure at these lows. Every time that buyers have tried to manipulate above or trade above that level, they have failed tremendously, tremendously. But again, they're protecting the 29.91 level. And buyers are stepping in at these lows. And I see buyers a little heavier than sellers in the sense that we've had some higher week lows within that range. This is very, very untradeable to me. This range, trading inside of a range it's not what I do. But what I would love to see is and here because of this move from the lows and this V-shaped recovery. This is important, guys, because let's put on this line right here below these lows. Even if, we can even use this lows right here. And I think we even liquidated this lows. Yes, we did. I mean, kind of. Let's say that we bounced from them. But this is a V-shaped recovery, right? If you have ever seen one, this is it. So we have liquidation of various swing lows in the past for a V-shaped recovery. This to me is very bullish. More so if price is making equal highs, but right now it's making higher lows. This is a very bullish scenario for me. What I would love to see at the open to go long is some sort of a price failure below this low or maybe this low. I would much rather look at the same V-shaped recovery at this low to enter long here on a better risk to reward ratio and target that 29.30. And this would in fact fuel for a break above and possible new all-time highs. And the reason behind that is that buyers that are stepping in right now, I don't think they're strong enough to break or to sweep or to, eat all of those sell orders here, right? I really believe that we need to liquidate these players, create that failure here for, big buyers to jump in and move higher. But again, that is just me. These are the scenarios that I'm looking for next week on the only two markets that I trade. Have a great, great market open, guys, and I'll see you around.